Welcome back to 3 with NGK. I'm Nicole.
I'm Grace.
And I'm Karina.
Hey. And we have joining us today my cousin, my amazing cousin, Jerome.
Jerome.
Top mortgage broker in the city. Jerome St. Bernard, aka Jerome St. B.
Oh.
Tell us a bit about yourself.
That was an amazing intro. Thank you for that.
Got you.
And I love what you guys are doing with the whole podcast. So thank you guys for inviting me, first of all. I saw you guys were doing some real estate stuff, so I was waiting for the call. So thank you guys for making it.
Of course.
Jerome is my name. I work for a company called Vine Group. We're currently the #1 mortgage team here in Canada.
Nice.
I'm a big believer in financial freedom, any type of entrepreneurial endeavors, and I think real estate is a really good way to get into those topics. So
Agreed.
here for your questions.
Agreed. Guys, I have to say, a lot of times after any meetings with Jerome, my clients absolutely love him because he makes the room just like ease up. Because sometimes real estate could be intimidating, you know? And I'm a social butterfly, but boy, he knows how to really win the room and win the clients over. And so thank you for making my clients like, you know, always, always feel good. And I was like, can we call Jerome directly? Like, you know, he was advising me on this thing. I was like, you definitely can, you know? Yeah. So my clients do ask about you quite a bit. So yeah, you definitely do deliver. So
thank you so much for that.
That's awesome.
That means a lot.
Awesome.
I aim to please. And I mean, we've been working together for about a year now.
The
same thing. Your clients love you and like your whole energy. So I'm happy to be here and part of your team. You know?
Dynamic duo, eh?
Right? Dynamic duo.
Okay. I can attest to that for sure. All right, so we're going to jump into some questions. We got a few for you. Hope you're ready.
Let's go.
So my first question, being a purchaser, what kind of credit history do you need?
Okay.
Before you ask us that, yes, so we collectively just took a bunch of questions that some of our clients have been asking us.
Okay.
And what we want to do is, there's somebody out there that does not know. So sometimes I answer them, but I save these questions for these public conversations because you just never know who's shy to ask. And, you know, some people don't really want to ask it. So we're here to really talk about all the things that, you know, people do need in real estate. So take away your question.
And then home buyers is at so many different stages of your lives, right? You have some first-time home buyers coming in as couple at the age of 20. Then you got first-time home buyers at the age of 40. So I think these questions well cover all types of scenarios.
Absolutely.
And purchases.
Absolutely.
For sure.
Yeah.
So talking about credit, Nicole, what is your credit score? I'm sorry to put you on the spot.
No, not at all. I'm actually glad you asked because, quick story, guys. I was actually recently looking for a new place. And in searching for that place, I had to obviously pull my credit report. Yeah. Pulled my credit report and it was crazy low. It was like 650 or something. And I was like, what is going on? Why is my credit so low? So at that time, it was just a score. I pulled a detailed Equifax report only to find out that the reason my credit score was so low is because I recently converted internet and I took too long to return the modem.
Oh no.
Rogers charged me the $300 modem return fee and they put a negative collection hit on my credit report. I disputed that because it was a pandemic. The stores were closed. They couldn't return the modem. I disputed it with Equifax. The minute they took that off, my credit went up to 8. I think it's like 810, 815 or something like that now.
That's crazy.
That's awesome.
So that tiny collection hit took my score from 810 odd to 650.
That's awesome. You know what? That's a really good segue just to talk about credit and Equifax in general because that happens all the time. I guess that's not really a mistake, but there's things on Equifax that we don't even know. I thought you were going to say you don't know what your credit score is, so I'm proud that you do know. Do you guys know as well?
We do.
That's the first step. Just know what it is because there's so often mistakes, especially if, for example, you have a very common last name, Mike Smith, Peter Chan. So many times people have like miscellaneous charges that they have no idea what it is. It's someone with their name, right?
Good point, yeah.
So the fact that you got to remove is great, but also if you would come to someone like myself, that's kind of our job, to mitigate the issues that we see and get you that approval. A lot of people will just go into their bank and like, for example, this week actually I had a client that had a prior bankruptcy maybe 2-3 years ago. They've been with TD for, I'm gonna say 10 years. They wanted to refinance their place. They saw the bankruptcy, they just declined the file. So they came to me, they're like, we really need to do this refinance for whatever reason. But I have to be honest with you, I did have a bankruptcy. They were able to explain the story to me, similar to your story, before they even got it removed from Equifax. And I went to the bank and kind of talked to them. This is what happened. This is how they've repaired their credit since. And I gave them a story. That made the difference between them getting declined and approved.
That's
really?
crazy.
Yeah.
So you advocate for your clients?
I make a business case. And that's the most annoying thing to people is me asking for all their documents. Because I want to see everything. I want your T4s, your pay stubs. They're like, why do you need all this stuff? It's because I want to see this, make a business case to get you the best chance and the best possible rate.
That's right.
Your bank's not going to do that for you. Your bank's going to say yes or no. Come back another time, right? So it's really important to work with someone on the broker channel, and I really advocate for that.
It may seem intrusive, but this information is very important.
Very important.
In order to position you to do your job the best that you can.
Exactly.
Oh, okay, that's interesting. I didn't even know that.
Yeah. So,
sorry.
No, go ahead.
To touch back on Nicole, like, growing up, you get your first credit card and you have your phone bill. You don't pay your phone bill. All these little things add up, and it just
and
it hurts
the
your
crazy
credit.
thing, like she said, sometimes it could be like a $3 charge. You forget about. It goes to collections. They're not giving you a house. Like how crazy is
for
that?
$3.
So,
outrageous. Like if you think I was stunned, you guys, you knew what I was going through. I'm like, why is my credit so low?
We're talking about it. And we're like, all right, we gotta call Equifax. Right away. And, like, you handle it almost immediately.
And there's mistakes all the
I'm
time.
like, what's going on?
But can we also discuss that? And I'll get back for you to touch on that. That a lot of people are terrified to check their credit score.
Oh, it's so
and
weird.
to me, I'm just like, why are you afraid? Especially when you're not looking to buy. It's the perfect time to actually look and check. And so you can start preparing yourself.
Because they don't even want to know.
They don't want to know.
That's a scary position
and
to be in.
That's a scary position to be in because
Often.
how are you going to leverage yourself and actually even see, you might be doing really well. You might be doing, you know what I mean? And so to touch on that, I feel like a lot of people don't want to check. And it's important to actually check monthly. Like Jerome said, there are a lot of people that have very similar last names that they don't know. You don't know what's running in your background.
Exactly.
I had somebody, my TransUnion at Equifax one time read 2 TD line of credits. I've never, ever had a TD line of credit. Luckily, whoever that is, their credit is really good. So it's not messing me up in any way.
There's another Grace one by?
I wouldn't say there's another Grace one by.
Probably,
but
somewhere.
But there's a TransUnion, like 2 line of credits.
Wow.
Like almost up to 50 grand.
Yeah.
But it's not even maxed out or anything like that. It's being paid on time.
It works in your favor.
So luckily, it works in my favor.
No one knows
right?
your situation better than you.
No one. I know I don't have that, right? So I'm actually going to call because that person, wherever they are, maybe they're not maximizing and they're good credit because they don't know what's on their account. Maybe because they just have good credit and they're not even thinking. So it's very important to check your credit because identity theft. And just being informed. You want to be an informed buyer, and like he said, like having multiple names, and little things like not returning a modem. Who would have thought, right? Or like a cell phone, right?
So, and also we have to talk about room for human error. Like a lot of times when you're opening up accounts at Rogers, Bell, etc., someone's typing it in based on what you're telling them over the phone.
Yes.
I have Nicole Antoni. I have Nicole different spellings on my credit report. It's because of someone's typo or someone.
Mine's the worst. I'm Saint Bernard, so sometimes they use the period. Sometimes they sometimes they spell out the Saint. Sometimes they put the accent. They make it French. So you gotta make sure you check.
Exactly. No, that's honestly good to shed light on because a lot of people don't even think to check their credit often. To be honest with you, I didn't prior to looking for a new place.
For sure. Most people, that's the first time. They don't even realize they need it until you need it.
Yes.
Right? So the sooner you find out what it is, even if it's bad, you want to know so you can start repairing it, of course. Right? So
I always say, like, one of my favorite sayings, Monique, that I used to work with, always says, preparation meets opportunity, right? And you got to prepare yourself so when the opportunity is there, you're not fumbling and stumbling. A lot of times people think that, oh, whatever I have saved, oh my God, I should be good. I have good credit, or I think I have enough. And okay, I feel like I'm ready right now. And then they've waited all these years not even checking what's needed because they haven't been preparing. And then, you know, you get into these frustrations where that you didn't even cause as an agent. You're just telling them what it is and they weren't prepared enough. But they thought they were. So I think it's worth paying $20, I believe, a month.
Yeah, to do the actual Equifax. I mean, if you were to meet with someone like myself in preparation for your house, I can pull your report for you, and that's actually the best one, right?
Yeah. Is that Equifax?
Equifax. You're going to do a consumer pull. Mine's literally a hard pull, kind of what the bank does, but it's exactly what the bank will see.
Got it.
That's another advantage to working with a broker because if you were to say you're rate shopping and you go to TD and then you go to Scotia, every time you see a different advisor, they're going to pull your credit. You don't want to pull your credit too often, right?
Yeah.
For the broker channel, you come to me, I have access to 50 to 60 different different banks. I'm going to pull it once. I'm going to make your business case, put it onto your application, and then I can shop that around. So you're not going to have these multiple credit pulls.
So is the Equifax different from what you see? Like
no, it's Equifax.
Okay,
so
the
you
lenders,
Equifax. Okay,
the lenders want to use Equifax. TransUnion is similar. It's always going to be off a little bit. Credit Karma, if you ever heard of that website, you can go on in like 30 seconds, find it. They use TransUnion. I say that's a good gauge to kind of get the range that you're in.
Agora as well. You do it for free.
Yeah.
Just to have an idea. It might not be as accurate, but you still have an idea of where you stand.
Exactly.
And then you could call Equifax at that point and just actually make sure, because Equifax has the most accurate information.
Yeah, I realized that because Scotiabank actually
I see it now because I'm a Scotia,
but they use TransUnion though.
I know, yeah.
And funny enough, my TransUnion score is lower than my Equifax score, and there's certain things that are missing.
That's
from
super
TransUnion.
interesting because it used to be the other way around.
I
used
heard
to always,
that.
and then you didn't see memes about it where it was like so different, but now it switches. So you just kind of use the TransUnion as a gauge, but the banks are going to want Equifax in the end.
Everybody wants Equifax. Equifax still is the most accurate one.
What I tell my clients is, you know it's going to be a little bit different from the Equifax, but at least if you know what your TransUnion is, and then you check and it went up, you know you're headed in the right direction.
That's right.
Or if it goes down, you know you need to change something, right? So at least it's a good gauge that way.
Absolutely.
For sure.
And I don't know if you wanted to add as well on the point when it comes to credit history, how many inquiries you make as well, and that any inquiry you make hits your credit, and people don't know that. Like every time you try to apply for credit card, that's all tracked on Equifax actually, and that's how. And then, we've seen cases where clients have tried to do inquiries 15 times at different places. Like if you're getting denied, like if you're not getting anything at the 5th try, stop.
Maybe stop at 14. At 14, like, we don't need 15.
It was the craziest, and the person has a decent credit score and whatnot, but the landlord, after seeing that many inquiries, that raised a red flag. This happens to tenancy as well, not just when you're buying a home. So this is what happens when you're looking for a place as well. So
super
credit history.
So how long do those infractions stay on your file?
So in Nicole's case, it was so recent. Recency is huge, right? So even in the case that I was just describing where someone had a bankruptcy, I think the bankruptcy was actually 4 years ago. So it's better than if it was last year or 2 years ago. The further away from an infraction, the better you are. But again, they still want a story. Why did you go bankrupt? In Nicole's case, why was there this charge?
Why was there?
If you can explain it and it sounds reasonable to them, you're in a better off situation.
Yeah. But were you asking about that, or were you asking about how long these hits with these inquiries stay on your file?
And also how long do the inquiries last?
Well, they're gonna stay there. It's just they become less relevant as time goes on.
Okay.
Right?
Will they stay there for like forever? For a number of years.
Yeah, pretty much. Like I've seen people's credit scores go back 10 years. So
yeah, you're right. I still have my 2000 Mazda 3 on my credit. So
wow.
Yeah.
Interesting.
It's a little report card on your life, right? You see what's been going on.
Right? Yeah. Well, just a quick question, kind of off topic a little bit. What was your guys' first exposure to credit? How did they get you into the credit system? Do you guys remember?
I'll tell you mine first. I do.
Okay.
You start.
I was in college, and I remember just going to get lunch, and right by the caf, this is how they get you. And my financial knowledge was like 0 to none. I'm like 18, right? And they had a setup station, MBNA. You guys know MBNA?
We sure do.
They had MBNA, and they had a station. They're like, oh, credit. Me like an idiot. I feel so embarrassed to say this on camera, but whatever, it is what it is. My financial literacy was like none at 18, right? So I'm like, oh, I get to access some money right now. I'm like, wait, so I'm like, so wait, you guys are gonna give me $2,000 right now? She knew me then. It's someone sitting next to our director. So literally, I had access to, I think it was like $2,000. I'm like, oh my god. That was my first exposure to credit. I went shopping for my house. I had a condo back then. I'm like, oh, let me go shopping for a condo. Furnished it, all that good stuff. Yeah. Then it came back to bite me in the ass because I was spending money I did not have.
And the interest rates were high on those.
And the interest rate was high. That's when they suck you in. And that's why it's so important to educate and have these types of conversations. Because the financial literacy, especially surrounding, credit, real estate, all of that.
Very important.
Depending on where you're at in your life, it's very low.
It's very,
Interestingly
very
enough,
important.
they recently said, I don't know if you saw this in the news, they're going to start teaching it in, is
Yeah.
that high school? Or
Yeah,
college?
high school.
I
Yes.
that's
love it.
Yeah,
They're
I would love to have
finally
known this
pushing it. Yeah,
when I was in high
imagine
school.
what we know now if we knew
Oh,
what
yeah,
younger.
trust me.
For sure.
Our
Yeah,
children
for
are
sure.
that's great for our children, you know?
It's amazing
It's
for our
amazing.
children. Yeah, and that's the thing. Like the younger that they teach children,
Mm-hmm.
the better it is long term,
Yeah.
right? Like for
Even just having
generations
these
to come.
conversations with people, like it just
Yeah.
it
It
sparks
starts
so many
opening up.
ideas and
Absolutely.
oh, you can make this much or you can invest. Like it's very helpful, I feel.
But I feel
Yeah.
like they need to do this because the economy is so crazy, especially with the housing market
Mhm.
being so high. They need to
Yes.
educate people ahead of time.
Absolutely.
They have to know.
Yeah.
Definitely,
Come on.
definitely.
And a lot of
definitely.
people are getting sucked into debt just because they don't know. They don't
Exactly.
understand it, right?
Mhm.
So understanding is the first step, and then you can
Debt
move on from there.
management.
Yeah,
For sure.
Debt
very
management.
important.
Like, you know,
Absolutely.
because there's
Yeah.
good debt and bad
There's
debt,
Good debt.
but that's another conversation
It
that
is.
maybe
Yeah.
Jerome will come back and we'll.
I get to come back.
we would
He's like,
love
I'm
for you
welcome
to
back.
come back, you know.
Yeah.
So another question, just to piggyback on that, we could talk about credit history all day, but I will say if you could take something out of that, like just check your credit score
Yep.
and see exactly what items are being tracked under your name and ask for credit optimization. There's companies that, you'll pay like $10 a month or, $20 a month. It's worth just knowing your credit optimization, and they help you actually tell you which account you could actually pay on time to actually add a number, add a score. So it's called credit optimization. If you want more information, holler me on the ones. And it's for a small fee, you could actually be educated for free on your particular bank account and your spending and the debts that you have. Did you ever know that? Do you know there's access to that?
No, I
awesome.
didn't know
I
that.
have no idea.
I didn't even
Me
know
neither.
until
That's-
somebody actually
That's
brought it
awesome.
up. Yeah, a client actually is the one that told me that's how they got to get their credit higher. So let me know if you guys want information on that. But I'm gonna
Yeah.
ask the next question that we've been asked. When lenders are looking at profiles, how important is job security or longevity?
How important is job security? So you mean like their tenure, how long they've been working?
Like from a lender's perspective,
Mm.
right? So, we know that income is huge and everybody
Yeah.
knows income is huge. And some people might say, you know what, like I make 80K, I make 90K,
Yes, yes,
what's
yes.
going on? I have a good credit score, what's going on?
Yeah. So when that comes into play, most often is if you work and you have a variable income. So there's fixed incomes and variable incomes. Not talking about mortgage rates at all yet. It's just if you are, say, a government employee or a teacher, you have a fixed income. Every 2 weeks, you're gonna get the exact same amount. Those are kind of the easy files because nothing changes, right? You know exactly how much. And if we were to take a pay stub, we can annualize it and we know exactly what you get at the end of the year. If you have a variable job, that's when it kind of matters. So that means if you're working sales, if you have commissions, if you get a bonus, if you work an hourly job and you have overtime, right? It's a little bit difficult to use the overtime income to qualify if you've been somewhere less than 2 years. The reason is they average out over 2 years.
Did you guys hear that?
Yeah, that's the important one. So if you get a bonus, they want to see what your bonus was this year and last year. They'll average it out. They'll add that onto your income. Unfortunately, if you just started an hourly job, the way that we calculate your income is on your employment letter. It'll say what's your minimum guaranteed hours. Typically, it's either 35 or 40. It'll say your pay rate. We multiply that. So a lot of my clients will push back and say, well, it says 35, but I actually worked 60 hours this week, right? And that's very, very common, like especially if you're, say, a TTC driver, someone like that. They work crazy hours and they get paid well for it. But you're gonna need to be there at least 2 years so they can kind of see some type of continuation that you've been making this or you've been working that amount of hours for 2 years. Then we can divide it and then we can use that full amount. So that's a really good question, actually.
Yeah.
Okay.
Yeah.
Okay, next question. What do you consider a AAA client? And how do you become a AAA client?
What's your credit score?
830. I mean the 8.
AAA.
Okay.
What is considered AAA? Like from what?
So AAA, I mean, it's subjective. I mean, I'm just saying a really good client. So of course, your qualifying income matters, but also credit's huge, right? So anything over 800, you're considered excellent. Earlier you mentioned it dropped all the way down to 650 for an A lender, which is the most competitive lenders where you want to be with. The big 5 banks are A lenders. They'll take you, usually 650 is the minimum, right? But from 700 and up, there's no real difference in the rate. So you can say what a AAA client is, but if you have a 750 score and you have an 850 score, you're still going to get the best rates. There's really no difference. So you're in that range. If you wanted a house right now, we'd be getting you the best rates.
But say I made like $45,000 just to say, and I had 850 credit score. Is that still a AAA client?
You guys would have to define what AAA is to you, right? Because yes, but your income is going to dictate what you qualify for, right?
Yeah, because like AAA, I think speaks more to the type of person you are when it comes to repayment.
Exactly,
right?
exactly.
Yeah. Okay.
Yeah, like what's your repayment history?
Yep.
Yeah.
But your income is what you can afford.
That's right.
Yes?
That's
Yes,
right.
exactly. So
Okay.
we
They're
look
also-
at you. You have this credit score. We know you are good at repaying your debts.
Yes.
You're gonna pay on time. You're not gonna miss any payments.
Yes.
But still, if you make $1 million a year, you're
Yeah.
gonna qualify for this. If you make whatever, you're gonna qualify for that. Like,
But you'll get the best interest rate.
yes,
Because you're
exactly.
okay.
You're gonna get a competitive interest rate,
Mhm.
and that should
What
be the goal.
holds more value, credit or the $1 million man that has the worst credit?
That's a good question. I saw that floating on my social media somewhere. They were debating. And I guess I can talk a little bit about the different types of financing. So this is another reason not just to go to your bank, especially if you have, if you're self-employed, if not all your money is shown on your taxes. A lot of people do cash jobs on the side. I have a lot of friends that'll do, I don't know, nails, lashes, stuff like that, making good money, but it's not shown on their taxes. So there is private money you can get. So private money is, they're using the house that you're buying as collateral. They just want to make sure that if anything were to go wrong, if you were to default on the mortgage, your house is...
Is that called second mortgages? Or
it's very similar.
Okay.
A lot of second mortgages are private as well, or B lenders. So let me take it all the way back. I'm sorry to bore you guys, but there's A lenders, B lenders, and then private lenders. So in your example, 650 and up, I said we're good for A lenders. Anything under that with your credit score, if you go to a regular bank like Scotia, TD, whatever, they'll turn you away. If you come to someone like myself, we can still get you in, but we're going to put you with what's called a B lender. The difference is they need a little bit more of a down payment. As a first-time home buyer, typically you can use 5%. For a B lender, they want a little bit more skin in the game. So you're going to need at least 20%. You're going to pay a little bit of a premium, but a lot of times...
Pause on that. Could you just stay on that first-time home buyers? Because everybody seems to think they qualify for 5% first-time home buyer.
Yeah.
Before you jump on, could you just stop there and just like elaborate?
I know exactly what you're talking about.
Yeah.
So legally,
like they will argue with you to the T that they qualify.
Legally, the minimum down, the minimum you need down for a property is 5%. But with that 5%, you still have to qualify. So a lot of people want $1 million property, and they're like, "Can I put 5% down?" And I'm like, "Yeah, you can put 5% down, but you only qualify for a $200,000 property."
Based
you know what
on
I mean?
your
Based on your income.
Yeah.
Exactly.
Everything has to align.
Exactly. And that's a lot of times when I talk to people and they can qualify and I say, you have the 5% down. You can use the 5% down, but your income's here and we need it there. Do you have a potential cosigner? Because potentially you can still put that 5% down, but we need your income up. So dad, mom, can you cosign for me? I only have this amount, but I want to qualify for this much. To answer your question.
Yeah, I think that's super, super important. But I cut you because I want you to elaborate that. It's a question that we get a lot of times.
I know exactly what you mean. Same.
It's very hard to let people know that your income has a big factor without being insensitive, and almost letting them know that there's qualifications to this, not just everyone does. And not only that, like a first-time home buyer too, like if people are looking for help from the government, everybody thinks that they could qualify for the 10%, 10% down as well, right? But people don't understand that the government takes a portion of your profits as well. Yeah, they're helping you get into the market, but you're not making the full profits all the way as well.
Yeah.
So it's still good because you're able to enter the market under your name and you're building equity under your name. You're just not going to sustain all the profits that you're getting. You're sharing with the government. Exactly. And you have to be in a certain income threshold as well. So
yeah, and exactly what you're saying. So and kind of, I'll use your example. You said someone that's making $45,000. Let's round that up to $50,000. A good way that you can kind of think to yourself, and when you do this calculation, you're going to be like, wow, they're not going to give me anything. I almost cursed, but I stopped myself. You can typically get qualified for about 5 times your income. So if you make $50,000 a year, the bank's going to loan you $250,000. The rest of that has to come from your down payment. So unless you have $200,000, you're not going to get $450,000, right? So $250,000 is the loan. The remainder has to come from your down payment. So even if you save that 5%, if you want a $600,000 house, you need that much more, unless you get another person to co-sign. So say you make $50,000, your dad makes $50,000. Now your household income is $100,000. Multiply that by 5, you can get a loan of $500,000. So that's kind of a rule of thumb. Obviously, we have to look at your credit. We have to take into account if you have any car payments. we got to look at your credit report. But just kind of a rule of thumb, I tell people in my first conversation, it's going to be something along those lines. A lot of people think that there's like some type of magic tricks you can do. They'll be like, no, just do the pre-approval. I want to see, maybe it'll be more. And I'll say, okay, and I'll look at your docs, I'll go through it, I'll underwrite it, and I'll send you the numbers, the exact numbers of what it is. And then they'll say, maybe I need a cosigner.
And you're like, okay.
Right? No, but it's good though. It's good to know exactly what you can qualify for by yourself. Because sometimes it's like, you might qualify for something and you're like, do I want to get this, or do I want to do a joint venture with someone else and get this as an investment instead of moving in? Or do I want to tell my mom, hey, why don't we get this together? Right? So you just have that conversation and kind of start planning things out is what I would recommend.
Yeah, that's great.
Good. Really, really good advice. So to piggyback on that, so you talked about the products. I was about to ask you, what type of products do you offer as a mortgage agent?
Ooh, perfect segue, yeah.
And the type of products do vary. So do you mind talking about the lenders, but also do you mind just elaborating based on a different lender how the interest rate could affect you as well?
Yeah, sure. So the first question, like different products, what you reminded me to talk about, I said I can't do any magic, but there are little tricks that you can do depending on the lender, right? And this is another reason it makes sense not to just go to any one lender, right? For example, like I started asking people this now right away because it's so helpful. If you have any kids under the age of 12 or 13, I know you get like a baby bonus, CCB. Some lenders won't use that, some will. So if I know you have kids and I know you're getting $500, $600, $700 a month for those kids, I can actually add that to your income and increase what you qualify for.
I remember we had more kids, more money.
I should have pushed out a few.
Have a baby, get a house.
I remember we were talking mortgages, and you had shared that with me, and I was blown because I had no idea that they included child tax benefit.
Child tax benefit, child support.
Yes.
If you have a parent that is retired, we can use pension, we can use old age security,
depending
on the lender. That's why just don't go to one bank, right? Talk to me. I'll look at what we need and I'll pick the lender based on that. And that's also why I tell people it's not always about the best interest rate. It's where do you qualify? Where can we get the most?
Right? And you know, because you work with these various lenders on a regular basis, so you know where you can try what, right?
And if you're if you're a AAA client over here, I might say, okay, we're going who has the best rate right now, we'll put you there. But if you need the CCB or if you need a cosigner that needs pension, I might put you there, right? It might not be the best rate, but it's the best for you.
That's
right.
That's right.
Yeah.
So super important.
That's right. I like that. It might not be the best rate, but it's the best for you as long as you enter the market.
Quote and quote.
I like that. It's bars,
Okay.
I love that.
All this information is good to know ahead of time, like ahead of the game, when you're younger.
Yeah.
Like to know all this information in your 30s. I mean, it's never too late to start,
for sure,
start figuring this out, but earlier the better.
I agree.
So next question I have for you, Jerome. Other than the down payment, what other costs should a buyer be responsible, or will a buyer be responsible for?
Other than the down payment, so actually Grace would be really good at answering this question. Closing costs, typically 1.5 to 2% of the purchase price. Keep that aside. You might not hit those numbers, but that's a good number to use. That's going to include your land transfer tax, your legal fees. Legal fees typically $1,000 to $1,500, depending who you use. So I would just make sure to keep that amount on the side. Some lenders will even ask you to prove it because people are clearing out their bank accounts to get the down payment.
That's right.
And they notice there's nothing left. So they'll say,
get that.
They'll even condition it. They'll say, can you show that you can close on this? Which is good, right? So I would say.
That's a very good point. What I might ask, part of the closing costs, so say 1 to 2%, but based on the global history and based on the loan to value, just in Canada now, they're actually encouraging buyers to prepare for 2 to 4% of your purchase price. Like that's how you're a really confident buyer. That's really puts you in the best position possible because you're buying, but you're not really, like you say, wiping your bank account clean slate, so I think that's the more you could save for closing costs, the better.
And you know what, you reminded me, we didn't even talk about that. Speaking AAA client, also assets, right? If you already own a home, if you have RSPs, mutual funds, stocks, they look at all that stuff, right? When I send my application, it has a list for assets, liabilities. You can list them. It just strengthens, right? If you have cash, if you have I don't know these days, a crypto account with.
I didn't know I could include
Crypto?
stocks.
Oh,
When we were
yes.
running my numbers, we never included the stocks.
But the thing is, it's not gonna change what you qualify for, but it strengthens your application.
Yeah.
So say for example, you had 650 credit, and they're like, do we approve? Do we not? They're like, look how much assets she has. That's something I would use.
Because
in my business case.
Okay.
Exactly.
Yeah.
It's like look at all the assets she has, right?
Yes. Okay.
Driving around in your nice car.
Yeah.
I'll tell them all about it.
Okay, that makes sense.
This is why you need an advocate when it comes to real estate, and there's so many different moving parts. And last conversation, that's when we were doing the Toronto real estate segment, we talked about the different moving parts. So as you can see, a mortgage agent is a very, very, very vital part to start the real estate process. We're here as agents just to match you pretty much on the property that matches you, but they really do the work and they really tell us like.
I kind of feel like you guys got the fun part. Because everyone comes to me and I'm like, no, you actually only
I'm telling the buying group.
And they're like, I hate you.
Yeah, you're the bearer of bad news.
And then they're like, where's Grace? Can we go look at houses again?
Take some back to shopping for houses.
Right? Yeah, you get the fun part. I gotta break hearts out here.
Yeah.
Yeah, I remember the first time I talked to you on rates, I'm like, you know what? I'm sorry I even called you. You just gave me bad news.
Right?
Like, that's what I want.
You started the phone call so excited.
I know.
Yeah.
Bye, girl. Talk to you another time.
I'll call you in 4 months.
No, that's awesome. And that's what we always tell people, because a lot of people are like, oh my God, I have all these houses I want to see. Here's like a bunch of listings I want to go. I was like, I don't want to be the bearer of bad news. We don't know. We don't know your numbers.
Don't even worry about it. Just send them my way. I'm the Grim Reaper. I'm used to it. We'll talk.
So we send them over to Jerome. We're like, before we do that, Jerome's going to take your application and actually tell you what your prescription is when it comes to real estate.
So you're really step number one.
Really,
yeah. And you know what? I watched the real estate one you did, and I was happy that you did say start with the pre-approval.
Yes.
That's the common misconception. You go to a realtor, you're only going to get your heart broken. Start with me. Let's get your numbers, and then give your realtor a range. And another thing, now that I know Grace is doing so well with pre-constructions, is one of the hardest things to get into real estate is a down payment.
Yes.
So come to me. We're going to start planning it out. I'm going to see if you qualify for something now, resale, but sometimes maybe you don't have that down payment, and that's when I'd say maybe check out Grace, see what projects she has upcoming, because the way that they break down the down payment, maybe pre-construction is a better route for you.
Very flexible.
And a good segue, do you have any projects now that you want to talk about?
We are running a few, but
thanks for asking.
We are running a few. We have some amazing incentives, but jokes aside, what Jerome said, the reason I enjoyed working with developers directly is you get to really see how they help people get into real estate comfortably. So you're able to pay for your down payment, but you're not required to come up with a closing cost. You don't necessarily have to worry about a mortgage agent all the way. However, it's still good to know your numbers, your credit report, because in 4 or 5 years, we will be bringing you back to Jerome, because Jerome still will have to say, can they sustain this project that they've been paying towards for the last 4 years, right?
And then,
so they'll still run the numbers the same way because you are taking a home ownership. But before then, you could pay while you fix your credit score.
So I do have people coming to me for pre-approvals for new builds and pre-constructions. So I just want to kind of ask you, because I know projects can run differently. What do you need for your project? What is required from someone that wants to
get into pre-construction? Yes, so that's
specifically one of your projects.
Very, very good question. So as having the privilege of being in a team with platinum brokers, we get access to a lot of incentives, and some of it because we have a partnership directly with the developer, they will trust us as long as we vet for their client. So some developers, they still want the full pre-approval, where you still have to be pre-approved as if you're about to enter the market, because they're offering some really high incentives, like the Daniels project. I don't know if you guys have heard about that. They only require 5% down. They only require $7,000.
You work with them?
No, but we've closed clients through them, but we're not directly we're not platinum brokers with them. No, we're not affiliated. Okay. However, it's one of the best projects because they focus on gentrification, and they want to help a lot of buyers that can never be approved get into the market comfortably. So 5% down. However, with that, they need a full mortgage pre-approval. So literally going to the bank, actually knowing the numbers, your credit score, and all that stuff. However, some developers, if they partner with platinum brokers, the importance of working with platinum brokers is we could write a letter on your behalf. You just have to consent that you're okay us representing you. So we could literally represent and say these people are financially feasible to take care of themselves when the project is complete, and all they need is a letter. And we have partnerships with Royal Bank as well.
I also offer those letters.
Yeah, I was going to say, I was just about to say, we have partnerships with Royal Bank, but when it comes to my personal clients, family, and friends, Jerome does take care of them as well, because he could also write a letter just stating that you are actually okay to take on this project.
Yeah, and so just to add to that, because at Vine Group, it's a very big brokerage, but we have in-house underwriters.
Yeah.
So we still underwrite the file. We still make sure that you are going to be able to close on this.
Yes.
But we can write a very similar letter to insure. I mean, when it comes to actually closing the mortgage, that's when you can shop around and choose. But if you do need that service, we can provide it as well.
And it's a very vital service to have, because a lot of people are very intimidated, right? They have the money, you have the cash, but you're just like, I'm not going to any mortgage broker right now because I know I'm not going to be approved. So start the conversation. You have the cash, you have the money, get into pre-construction, because as long as your partner with the developer does not charge you for an assignment, which is just selling over your contract, get into pre-construction if you can.
Oh, you just reminded me of something I want to talk about. Am I allowed to just talk?
Yeah.
So just because I know pre-constructions are getting so popular right now, typically you start a project, when does it close?
About 2 to 3 years if it's like a townhome or a regular house, but master plan condo community, you're looking at 4 or 5 years.
Okay, perfect. So it's gonna have a lot of time to appreciate.
Yes.
There's gonna be a lot of equity there by the time you close, and a lot of people don't know that there are ways to access that on closing.
Yes.
So I won't get into that right now, but just know that if you've been paying into a place, especially sometimes they get pushed back, and you need to close, you need to move in. Sometimes you're scraping all your money. There is a way where you can access not only the money you put in, but a lot of that equity that's been building right off the bat.
Really? Okay, that's good to know.
Yeah.
Typically, they want at least a year inside, but there are ways if you need something sooner. So contact me and we can figure it out. But the equity's there, right?
The equity's there, and it's growing. Because they can't deny you. Yeah.
Exactly. Your house is now worth much more than it was when this whole process started. So
nice.
Good to know.
For sure.
Exactly. Yeah, that's a very good.
There's options. There's options.
There's definitely.
And I mean, you've seen in the last few years, there's projects that have went up 50, 75, 100,000 per year in this last little boom we had, right? So you never know, depending on where you are in the time period. It's a good, it's real estate is always going to be a good place to make money, a good place to invest money, and a safe place, right?
A very, very
Stocks,
safe place. Yeah.
Crypto, risk, right? You never know. Market can crash. People are always going to need a place to live.
Exactly.
Right. So it's a very safe place.
Yeah. I like that you added onto that. And somebody will ask, I'm like, condos are now selling, pre-construction condos are selling at $1 million. And it doesn't make any sense. It's a condominium, right? But there's a market for it, and this is the pressure of the market. And Toronto
world-class city.
Shows you, it just shows you that, Toronto can withstand any type of pressure when it comes to real estate, and it will continue so. And it's not going to stop, because a lot of people are saying, oh, well, the market is going to crash. For as long as we see a demand in houses, it cannot crash, because people do need places to stay. And there's the affordability factor where a lot of people are not able to buy a home right away. So investors invest in pre-construction, invest in real estate. You could rent it out, right? Yeah.
Awesome.
Yeah. That's, we could go like
especially the two of you.
Yeah, we could go deeper and deeper. I just had one more question. I know you kind of tapped on it, but again, because somebody asks this, for a client or first-time home buyer looking at an entry-level unit priced at $500K, what does their profile look like?
I guess we could use the same example. If you have a household income of $100,000, boom, you can get your $500,000. I do still recommend. I know that people say 5% down is the minimum. If you can qualify, I still recommend, if you can get to the 20% down payment, which in this case, if the purchase price is $500,000, that's $100,000. I know that's a very hefty amount, but you get to avoid CMHC default insurance, right?
Yes.
Most people don't know about that. Most people, even going into the mortgage process, very common for me. They want to put less than 20 down. The mortgage loan may be $450, and then when they see the actual amount, it's like $470, $480, whatever the calculation is. They're like, what's that? So just so you know, depending on how much you put down, they've tiered it. So 5%, then 10%, then 15%. They're going to charge you this default insurance. I don't know if we have a lot of time to go into exactly what that is, but if you can get to the 20% mark, the bank is going to pay that for you. So you don't actually have to put that down. So if you can get to the 20% mark, I definitely recommend it. And another benefit to 20% is you can amortize meaning the length of the loan over 30 years.
Yeah.
Anything under, it's going to be 25 years. Once you hit the 20% mark, you get 30 years. So your loan gets lengthened and your payments will decrease, right?
Yeah.
A couple $100s. So especially first-time home buyers, you want to keep your you want to keep your expenses as low as possible. So if you can even borrow money from family, if you're like, especially if you're at 15, 16, 17%, you're so close.
You're so close.
You know, ask mom or dad or, you know.
Ask mom or dad. Y'all, I'm getting stressed out. I've been saving for 20% for the last 15 years.
You're doing good.
You're doing stressed
good.
You're
doing good. But you're gonna end up saving so much money. Your payments are gonna be lower. You're not gonna have to pay that insurance, and then that's just gonna be your equity after when you or your money when you sell, right? So,
yes. It's gonna pay off for sure.
Yeah. I'm so proud of this too. I just want to say they're working so hard towards their home ownership goals.
Me too.
Thanks,
like, just super proud, just being on top of it. So it's definitely motivating to be in a circle of people where you don't have to even talk about it or convince them.
Yeah,
they already know what they need to work on.
Yeah.
As we wrap up, I just have one more question that I want to ask Jerome in public as well. So HELOC and and refinancing as well, right? So when you own property, do you mind just elaborating on equity?
Yeah.
When it builds up, and how much access you have for that, and how the advantages and disadvantages.
Yeah,
I'll tell you why I asked that after.
Okay, so I'm gonna take that as an opportunity to discuss fixed versus variable.
Yeah.
I typically, it depends on the time, but right now I'm recommending variable just because of the flexibility, right? So we've seen some huge increases in the value of property over the last year.
Yeah.
A lot of my clients' properties have went up 100,000 or more, especially in the Pickering, Ajax, Durham region. You have a detached house, yes. 100, 150, 200,000, you've gone up. If you've recently started a fixed rate mortgage, the way they calculate their penalties is called IRD, interest rate differential. And in layman's terms, to simplify it, they're trying to charge you a break penalty for how much they're going to lose by you breaking that mortgage. And it can be tens, 20,000s. On the other side, a variable mortgage, which can move up or down with the Bank of Canada rate, the penalty is much more flexible. It's always going to be 3 months interest, regardless of when you break that mortgage within the 5 years. So a lot of people right now, if you're not sure if you're going to be switching jobs or moving or having kids and having to move, or if having to refinance or do an equity takeout in the next 5 years, I'm saying go with variable. It's much more flexible. You don't know what's going to happen in the next 5 years. If you want to break this at any time,
you could.
And the most common thing that's happened between last year and this year where we saw this boom is people were seeing interest rates that are very cheap, historically cheaper than ever before. So just refinancing to save money makes sense, right? So if you're in a variable, boom, we'll get you out of there. We'll get you from 2 to 3% down to 1, whatever percent it is. You're going to save money monthly, but also because your properties went up in value, we can take some equity out if you want it. There's so many things you can do if you wanted to refinance, and with such a small penalty, like typically, let's say you're paying $2,000 a month for your mortgages and you have a variable mortgage, your penalty is going to be $1,500, $2,000. Equity's gone up maybe, or the value of your house has gone up $100,000. That's nothing to take some of that out. Use it to pay off your credit cards, pay off your line of credit. There's a lot of things you can do. So just kind of because of the flexibility, I'm pushing people towards variable.
Very nice, very nice. One more thing I just wanted you to quickly add on to. So a lot of people, when they come to pre-construction, because they have equity in their properties, they feel the need to tap into HELOC. What HELOC means pretty much, Jerome, you can add on to it, is based on how much your house is appreciated, you could pull some of that money out, refinancing, or taking some of your equity.
And I forgot to talk about HELOC. Sorry, it was the machine thing.
I threw you off, yeah. But I'll tell you why I asked that, because we have just way too many people getting way too comfortable trying to touch that HELOC, but it might not be a good thing all the way. So what it is that people are trying to do is pulling out their money and investing in pre-construction, multiple pre-construction projects, because they have it. But if you want to elaborate on how that may increase your monthly mortgage as well, and how you need to be prepared for that. So
a home equity line of credit is a line of credit that's attached collaterally to your house, right? So they're going to give you a really good interest rate on a loan, kind of similar to a credit card, but because it's attached to your house, you're going to get a really good interest rate. People are seeing this and they're using it for down payments. But what you have to keep in mind is when we pull your credit, we're also going to see how much you owe on your line of credit, and I think that's what you're seeing, right?
Yes.
So you're gonna take 20,000 off of your HELOC to make a down payment. We're still gonna see there's 20,000 missing.
Yes, it's adding to your debt.
Exactly, and this is where it's very important to choose your banks wisely, especially if you want to be a real estate investor. If you want to go 1 to 2 to 3 properties, because the way that banks underwrite their files are very differently. For example, there's certain banks, if you have, let's say, a $50,000 HELOC, when we pull your credit, regardless of if there's a zero balance, they're going to show 50,000 as the charge. And they're going to put that into your debt ratios. Versus other banks where, say you've used $100 out of that 50,000, they're going to look at the $100, right? So it really matters what bank you choose if you are planning to real estate invest. So that's why it makes sense to plan it out, meet with someone like me, and if I know your goal is to not just buy your home, but you want to buy 1 or 2 or 3, I'm going to make sure you're with the right bank that's not going to take those things in consideration.
That's right.
It's a great question.
That's so important to know. And if you want more information on HELOC and how you get into it, feel free to give us a call and we'll elaborate because it's just more.
Anything I said that was confusing, please. At Jerome Does Mortgages.
Yes.
Sorry, over there. Thank you, sir. At Jerome Does Mortgages on Instagram. JeromeSt.Bernard.com. I don't know if it's my time to tell people this, but if you're confused,
it is. No, of course.
Okay.
Yeah,
no,
for sure.
You
and we're gonna tag Jerome if you're following us on Instagram. It's at 3 way with NGK. So if you're not following us, go ahead and follow us, and we will be tagging Jerome's Instagram page and website in our bio, in our caption. Definitely.
And Jerome is so approachable, so please just reach out at any time to his DM.
Please, any questions?
Yeah, he's amazing. Good energy, very informative. As we wrap it up, and I hope we get to see you again very soon because
invite me back.
We'll give you a spicy.
Yeah. Next time, no finance, something spicy.
We're ready.
I got other opinions too.
Oh my god! I don't know if I'm ready for
Nicole doesn't want to have those talks when I'm around.
Definitely, yeah. But thank you so much. Thank you guys for tuning in as usual.
Always, yeah. So as I said, guys, follow us on Instagram if you're not already. 3 way with NGK. If you're watching us on YouTube, go on ahead and subscribe and turn on post notifications. The link in our Instagram bio will take you to all of the podcast platforms. So Apple, Spotify, etc., etc., etc. Like, follow, subscribe, share, show love. We appreciate you guys.
In that order.
Bye. Bye, guys. Cheers. With my little bit of life.